I got a notification from my bank this morning that genuinely scared me.
What kind of notification?
The kind that says, your balance is lower than expected. And I thought, lower than expected by whom? I hadn't checked that account in 3 weeks. I had no expectations at all.
Marcus, I have heard a lot of things from you, but I had no expectations of my own bank account might be the most alarming.
I'm Marcus.
And I'm Kayla. Welcome to Almost Fluent.
Today, we're talking about money and banking in American English. Not how to actually manage your money, because I am clearly not the person to teach you that, but the words and phrases you'll need when you're setting up an account, paying people back, and trying to figure out why everyone here is so obsessed with something called a credit score.
So, the first thing most people deal with when they arrive in the U.S. is opening a bank account, and the vocabulary around it is more specific than you'd expect. The two main types are a checking account and a savings account.
I have had a checking account for years, and I only recently worked out what the checking part actually refers to.
Paper checks, which Americans still use far more than almost any other country. Your landlord might want one every month. Utility companies sometimes ask for them. You will occasionally see someone writing a check at the grocery store, which always takes longer than it should.
My landlord requires one. I had to call my dad the first time I needed to fill one out. I was 24 years old.
The parts of a check that confuse people most are the routing number and the account number. They're both printed along the bottom. The routing number identifies your bank. It's the same for everyone who banks at the same branch. The account number is unique to you. You'll be asked for both of them constantly when you're setting up direct deposit or paying a bill online.
Direct deposit is another phrase I nodded through very confidently on my first day at a new job.
It just means your employer sends your paycheck straight to your bank account electronically instead of handing you a physical check. Almost every employer does it now. When HR asks for your banking information, that's what they want: routing number and account number so they can set it up.
Which I now know after the situation where I got those numbers slightly wrong and my first paycheck went somewhere completely unknown for 11 days.
Wait, how do you lose a paycheck for 11 days?
I transposed 2 digits in the account number. It went somewhere that was not me. The bank was very calm and sorted it out eventually, but I spent nearly 2 weeks checking my balance every few hours, which is more attention than I have given that account before or since.
Most HR departments will ask you to attach a voided check to the direct deposit form, which would have made you look at the actual numbers instead of typing them from memory. That form exists precisely so that doesn't happen.
A voided check? So you just write void across it and hand it over?
Exactly. It gives HR your routing number and account number straight from the source. No typing required. It's one of those things that sounds more complicated than it is. The other word you'll hear a lot, especially when you're first figuring out your budget, is overdraft. That's when you spend more money than you have in your account and your balance goes negative. Banks will either decline the transaction on the spot or they'll cover it and charge you a fee.
The fee is the brutal part. I overdrafted twice in my first year here, and the fees cost more than what I'd actually overspent by. That felt like a punishment designed specifically for me.
There's something called overdraft protection, which you can set up to link your checking account to your savings account. If you go negative, the bank automatically moves money over instead of charging you the fee.
Why is that not just the default? Why do you have to opt in to the thing that prevents the bad outcome?
That is a completely fair question with a very American banking answer. A lot of protections and features exist, but the bank isn't necessarily going to walk you through them. When you open an account, it's worth sitting down and asking directly, what happens if my account goes negative? Do you offer overdraft protection? And are there any monthly maintenance fees?
The maintenance fee thing caught me off guard too. I moved most of my money to a different account, didn't realize I'd dropped below some minimum balance, and suddenly I was being charged $8 a month just to have an account I wasn't really using.
Almost always avoidable if you know the terms up front. Most banks waive the fee if you have direct deposit set up, or if you maintain a certain minimum. The question to ask is, what are the conditions to waive the monthly fee? Not just, what is the fee? What makes it go away?
That is a much more useful question than what I asked, which was nothing.
Something that feels very particular to American daily life is how people pay each other back for things. The apps people use for that have basically become part of the language.
Can you Venmo me?
Fully accepted. Venmo and Zelle are the two biggest. Venmo is the social one. It has a feed where you can see other people's transactions, which is genuinely strange when you first encounter it, but people here enjoy it.
I sent money to someone for pizza, and it showed up publicly as pizza night for my entire contact list. I had not been warned about this feature at all.
You can set your transactions to private in the settings, which is worth doing if you'd rather not broadcast your life. But a lot of people leave it public because it functions almost like a social feed. You can see who went to a concert, who split a cab, who owes somebody for brunch.
I genuinely know more about my coworkers' weekends from Venmo than from conversations with them. Someone paid for go-karts, and now I know things I didn't ask to know.
Zelle works differently. It connects directly to your bank account and moves money almost instantly without needing a separate app balance. Most major banks have it built in now. For larger amounts, people tend to prefer Zelle because the money lands in your account straight away, rather than sitting in a Venmo balance you have to transfer out.
The phrase I've had to learn is, "I'll cover it, just pay me back," which sounds casual, but apparently has an unspoken time limit attached to it.
Same day is safe. Within 24 hours is completely normal. After 3 days, it gets uncomfortable. The person who paid has to decide whether to request the money and feel awkward about it, or let it go and quietly resent you every time they see you.
I have been on both sides of that situation, and neither one is pleasant. The 3-day Venmo debt is its own specific social anxiety.
The thing that surprises almost everyone who moves to the U.S. from another country is how seriously the credit score is taken. It's a number that affects your ability to rent an apartment, get approved for a car loan, and sometimes even get certain jobs.
Can you explain what it actually is? Because I feel like people throw the phrase around assuming everyone already knows.
It's a score between 300 and 850 that represents how reliably you pay back borrowed money. Lenders, landlords, banks, they all use it to decide how much of a financial risk you are. Generally, above 700 is considered good. Above 750 is very good. Below 580, and you'll find a lot of doors are closed or the terms you're offered are much worse.
And if you've just arrived from another country, you have no score at all, which, from what I understand, gets treated almost the same as having a bad one.
That's the genuinely frustrating part. No credit history doesn't mean you're irresponsible with money. It just means the American system has no data on you. The standard starting point is a secured credit card. You put a deposit down up front, that becomes your credit limit, use the card for small, everyday purchases, and pay it off every month. After several months of that, you have a history.
Are there other things that affect the score, or is it purely whether you pay on time?
Payment history is the biggest factor, but there's also something called credit utilization. That's the percentage of your available credit you're actually using at any given time. If your credit limit is $1,000 and you regularly carry $800 on the card, that looks risky to lenders, even if you're technically keeping up with payments. The general guideline is to keep it under 30%.
So you can do everything right and still hurt your score just by using too much of the card?
The amount the bank reports, which usually happens once a month around your statement date, is what gets recorded. So if you tend to use your card heavily through the month, paying the balance down before the statement closes looks better than paying it after. It's a small thing, but it adds up.
I did not know any of this for an embarrassingly long time. I thought as long as I was paying something each month, I was doing it right.
That's where a lot of people get stuck because the minimum payment, the smallest amount the bank will accept to keep your account in good standing, is designed to keep you carrying a balance and paying interest on it, sometimes for years. Paying your balance in full every month is what actually builds the score without costing you anything extra.
I paid interest on a credit card balance for about 7 months before I understood that distinction. I kept seeing minimum payment due and thought that was the finish line, not the trap door.
That's the most expensive way to build credit there is. But it really is a mistake most people only make once.
That is our episode on money and banking in American English. Whether you're opening your first account this week, still not sure what a routing number is, or just realizing you've been paying a monthly fee for no reason, we hope this helped it make a little more sense.
Banking in America has its own language, and a lot of it nobody explains until something already went wrong. Ask your questions up front. Learn the conditions on your account before you need them, and don't let the credit score feel like something mysterious that happens to you. It's something you build, and once you understand the rules, it's a lot less intimidating than it sounds. And the best way to make all of this language feel natural is exactly what you're already doing, just listening to real conversations, the way real people actually talk. Keep showing up, and it all starts to click.
She's not wrong. We'll see you in the next episode.
See you next time on Almost Fluent.